Enam Holdings and began by asking him about what's in store for the markets in 2017. Listen in.
This year itself, which has gone by, it started terribly, then did so well, and then again cracked in November. But like you said, if you had said that there will be Brexit, demonetization, the arrival of Donald Trump, Italy probably thinking of leaving Europe, market should have fallen apart. And the fact is we are holding on, we're resilient. And we are seeing for the first time emergence of domestic flows offsetting global flows. And reality is the foreign inflows this year in the secondary markets have now been, what, barely $4 billion this year, which is nothing on the base which they have. So there is hope around India. The world certainly has never looked more scary and more volatile. India also, with now demonetization and GST, is heading into a period of uncertainty and earnings look very tepid. But, you know, as you say, hope springs eternal. There's a lot of macro things which are headwinds for us. And yet, there are demographic trends, entrepreneurial trends which are tailwinds for us. So on balance, I'm cautiously optimistic. I think that's the best way I can sum it up.
What's the global backdrop looking like? Because, I mean, the dollar's on a tear, market did not fall after the Donald Trump victory, and bond deals are rising after so long. I mean, where does it keep the global market backdrop for us?
So, I mean, globally, look, after 2007, and we've spoken on many occasions, it's been completely schizophrenic. So we go from complete euphoria to complete gloom in a matter of 6 months. And I suspect it's something like that currently going on, where you have the Fed chief saying we will hike interest rates, suggesting the US is doing well. And at the same time, the incoming president says they want to run a stimulus package, which suggests the country is not doing so well. And in a country where the Federal Reserve is leveraged 99:1, one would imagine a 25-50 basis point interest increase would basically bankrupt that. Or a hike in fiscal deficit would again bankrupt that country and the unfunded liabilities that sit in the US, which by the way is the best economy out of the whole developed world. It's a bit bizarre, and with the $150 billion infrastructure spend that Donald Trump talks about, we've had a global rally in infrastructure and metal stocks, forgetting that actually China used to spend $1 trillion, and yet these were flat on their back 12 months ago. So it's really confusing, and I don't think macro bets one can hazard. The clearest trade, of course, today is the euro is clearly going to 0.9 against the dollar, and it's going to fund the carry trade because the dollar is surely going to rise, the euro is surely going to fall. And what repercussions that has for emerging markets is pretty grim. So in that context, if India loses its, macro stability, which this government has done very well over the last 2.5 years, because we were considered fragile 5 and now we're considered one of the shining stars, juxtaposed with the fact that this should be a growth market given that we have unit volume growth. That's the long-term outlook why long-term investors have remained interested. But the short term, surely, FY17, I'm guessing we will end with 0 earnings growth. FY18, who knows what happens with GST around the corner, with UP elections around the corner, what the behavior patterns are. And we're still at the heart a really small economy.
Yeah.
When I look at the profit pools and the size of the economy, it just doesn't tally with the real size of this country. And I suspect the answer at some point will come through currency adjustment. I can't for the life of me fathom why the rest of the world blew up and our currency went from 40 to 70 with oil prices falling off the way they did. Now, of course, they've come back, and that's another headwind for us on the macro side. But unless we manage to fix currency, I can't see how we create a very, very long structural bull market over here.
Is there a case for a global bull market right now in emerging markets?
Definitely. Or? Yeah, I mean, look, you've come out of 35 years of the bond market went from a high of 1980 in terms of interest rates to a low, which basically has ended now. So it's a 35-year super cycle for bonds which have ended. And the reflation trade where, every time something happened, you had effectively the central banks coming to bail you out. And that kept equities afloat, asset prices afloat, and the gush of liquidity which went around the world. So something has turned in the world. It seems to me in technical parlance, it's an extension of a bull market rather than a new bull market in the world. And people trying to keep a plateau in economies which clearly have run the best by date. So if you look around at Japan, you look around at Europe, you look around indeed at most of the US, really all the votes that are now coming to these nationalist right-wing kind of tribal type leaders is a reflection of that growing frustration in those economies that were ex-growth. In that scenario, to call bull markets is really difficult. The predication, of course, in US is that Trump will get the $2.5 trillion of corporate assets stashed overseas back, and you get a wave of buybacks in US, you get a tax bonanza there. But that's not the stuff which makes lasting bull markets. Also, with a rising dollar, it's going to be tough for emerging markets. So I can't really make a good macro case to say that you should be here. And yet, when you go and do bottom-up companies, and you see the work which is going on over there, and the relative size, that gives you hope that surely this company can't be this size 5 years later.